Oh, hello, welcome back, everyone. And we're going to have a great topic as always. My name is SeeWing Yee from the Yee Real Estate Network, and my co-host once again is Julie. How are you, Julie?
Good morning, fine, SeeWing. How are you this morning?
Fine, fine, thank you. So, Julie been co-hosting with me for several years now. She's one of
Hmm.
our members of our investment network, a community of several thousand like-minded real estate
Hmm.
investors from across the country. So we have investors and students within my community from all over the country, but most of them are living in California. Myself, I live in San Francisco Bay Area for several decades, and Julie, you're pretty much born and raised in Southern California, right?
Absolutely. I have my whole life. Yes.
Good, good.
Hmm.
Yeah, there's no other place we
That's
rather
right.
live. Live where you want to live, invest where the numbers makes sense, right?
Yes, absolutely. Absolutely.
And, and, the, and the numbers make sense. We buy long distance. We buy out of state
Right.
turnkey cash flow properties, entry
Yes.
properties across several different markets over many years, over decades. So
Hmm.
without further ado, here we are. We can talk about how Julie, you're gonna be very intrigued by this topic. AI, artificial intelligence,
Hmm.
could create housing market winners and losers. So,
Hmm.
so Julie, my presentation, my objective is I have another great metric to
Hmm.
to evaluate for any investors. So,
Hmm.
so any turnkey mom and pop real estate investors, it does not matter where you live in country.
Okay.
Of course, we all have to do research and due diligence and all that.
Yes.
Yeah, and we have to vet, real estate investing market is all local. There's no such thing as a national housing market. But
Hmm.
the metrics I'm about to show you, it'll even surprise you, Julie, you being a very experienced real estate investor like yourself. You
Hmm.
have, you have a nice portfolio of properties you purchased through our network uh,
Yes.
a number of years ago. So even you could be surprised. This this defining metric,
Hmm.
it'll make for the future if you use the metric you can learn today, uh,
Hmm.
and investors take action on the metric I'm going to share with you for the next 20 minutes. Who knows? You can achieve very good generational
Hmm.
real estate wealth. So, Julie, without further ado, yes, AI could create a housing market winners, and I'm going to we in a shortly toward the back end of this presentation, I'm going to show you the exact housing market where you can become a winner. You can take this information you learn, this artificial intelligence.
Hmm.
Artificial intelligence is all about the future. It's all about technological revolution. We're going through some exponential growth of technology with the internet, with the AI,
Hmm.
with everything else. And it'll change the way we live for the next generation and beyond. Don't you agree, Julie?
Oh, absolutely. Yeah, AI is in everything. And I mean literally everything. So yeah, if we don't, if of course it would be in the housing market as well, why not? Right?
Yeah, exactly. You cannot fear artificial intelligence. You have to embrace it. You have to,
Right.
learn more about it, how it's going to impact the world, the US, the real
Hmm.
estate housing market, and your own real estate portfolio, each and every one of your regular mom and pop real estate investors who are listening, who are interested in buying single family home residential rental properties. We do it in a very good way, turnkey, as you know. But anyway, so let's go through this article as that was done by this very good consulting company, Resi Club. Resi Club is a
Hmm.
it provides some great data around the economy and real estate. So here, let me go through the first paragraph. Resi
Hmm.
Club says one of the biggest uncertainties in housing right now isn't the post-pandemic housing boom cooling window
Hmm.
that we've been passing through.
Hmm.
That part is cyclical. we have a good framework for understanding how that works. Right.
Hmm.
The bigger uncertainty is structural. It is how artificial intelligence could reshape the labor market over the next few years and how uneven that reshaping could be across local economies. So, incomes, people's salary, your W-2 income, okay,
Hmm.
the normal workers out there, it
Right.
matters enormously for home prices. So my takeaway so far, Julie, is the jobs,
Hmm.
the jobs. How many jobs? What kind of job? What kind of
Right.
income? What kind of salary that will produce those jobs in relates to the housing prices in a particular area? That
Right.
this connection determines the potential
Hmm.
housing appreciation of a particular location. Does it make sense?
Interesting. Yeah, I understand what you're saying. Yeah, definitely.
Yeah. Any quick takeaway you have
Oh,
from
I think, incomes for a long time have been the driving force in the market because I think about when prices really began to jump, I would say back in the, late 60s, early 70s when things were starting to move, women were in the workforce more. So there was a lot more income coming into the household, which began to drive the prices up.
Yeah, as a matter of fact, we can speak on the areas that we live in. You live in Southern California,
Exactly.
and I live in San Francisco Bay Area for many decades.
Right.
We have seen over the last
Hmm.
several decades the high tech, the technological boom income in
Hmm.
California.
Absolutely.
Uh, the high income creates very, very high housing prices, right,
Absolutely.
in
Absolutely.
California.
Hmm.
So
Yep.
yeah, there's a blueprint we can learn from decades of California housing market and the
Absolutely.
and the technology boom, Silicon Valley, high tech, now artificial intelligence. So let's continue. According to
Mhm.
Resi Club analysis, there is a strong positive correlation between a market's medium home price and its medium household income.
Mhm.
So medium household income. So income are huge when it comes to home prices. So, okay, so that's
Absolutely.
what we alluded to. Okay,
Right.
we as a real estate investor, as a mom and pop investor, Julie, we need to
Mhm.
determine before we buy a rental property in a particular location, uh, does it have jobs? Does it have
Right.
uh, population growth, job growth, migration growth,
Mhm.
and what type of jobs that can support the local housing market, right?
Right. Right. Absolutely. Absolutely. Makes sense.
Yeah, it's
Mhm.
all fundamentals. That's
Mhm.
how real estate investors. That's how we do research and due diligence before we need to buy. Okay, let's get down to nitty-gritty. We need to buy cash flow homes, right?
Yes.
We need to look at we have to underwrite the numbers, the rent we collect, what kind of renters, what type of quality of renters that are able to willing to rent our rental properties so
Right.
so we can make money off it.
Absolutely.
So
Mhm.
we have to identify if we put 20 to 25% down payment on a rental property, we want to make sure the income level and the stability of the renter and the rent that we collect will cover all our expenses.
Yeah. Absolutely.
And at the end of the day, we can still achieve several $100s of monthly positive cash flow, right?
Right. 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 Absolutely. 100%.
That's right. That's
It
right.
all gets down to the numbers.
Yep, it's all about the numbers. So
Yes.
it says if AI simultaneously boosts productivity, profits, and compensation in other pockets of our industries, that will also be felt in
Mhm.
housing. In housing, housing doesn't
Right.
exist. Housing does not exist in isolation. It
Right.
connects to various economic and local factors in a particular
Mhm. Right.
location. So if you look back for years and years ago, high income job markets tend to have higher price housing markets, which is obvious. Look at this chart for the past decades and decades. You look at
Wow.
San Jose, Bay Area, where I live right now,
Right.
and San Francisco. Look at the income level. Like, medium household income 160K plus. You
Right.
you look at the median price of homes 1.4, 1.5, or even higher in Bay Area, right?
The direct correlation between the income and the
Yeah,
housing market, just like we were saying. Yeah.
yeah. Look at Southern California, same
hmm
thing.
That's
LA,
about
San
right. Yep.
Diego, right? Yeah, high
hmm
income equal much higher prices. Then you compare apple to apple to a Midwest market.
Right.
This particular research study allocates Youngstown, Ohio. A
Right.
typical Midwest market
Midwest. Right.
where you have low income and low home prices. So,
Right.
all right, that's how it is. That's how it is.
hmm
So
hmm
let me fast forward again, between 1975 for the past oh wow, for the past 50 years until November,
Yes.
November 20,
hmm
November 2025, home prices have grown, and especially in the Bay Area in Southern California.
Wow. 1100%. Wow.
Yeah, yeah, 1,137%.
Wow. That's amazing.
Yeah,
That's
over the
unbelievable,
past,
actually.
yeah, over the past 50 years, and then you compare to the housing price increases in Youngstown, Ohio, the Midwest
hmm
type of market, it has only grown 483% over the past 50 years. So
hmm
what's the reason? Okay, and look, the reason is very obvious, but let's talk about it anyway. San Francisco evolved into a global technological and venture capital hub.
hmm
It
hmm
attracts high salary.
Right.
Youngstown, typically, Midwest in general, Ohio, Illinois, yeah, Indiana, and few, Missouri and Tennessee,
hmm
whatever, typical Midwest, Rust Belt area. The
Right.
Midwest for years struggled with deindustrialization and slower income growth,
Right.
and it all transmitted into housing prices. Okay.
hmm
So, as real estate investors, Julie, don't we want to buy a property that cash flow right now, and we want our property to appreciate in value so we can create wealth, right?
Absolutely. 100%. That's the whole point.
That's the whole point. So, in
hmm
order for our houses that we own to increase in equity and appreciation, we need to ensure that the income level in an area that we invest in continue to have higher income, so so renters can afford to pay rent uh,
Absolutely.
for our portfolio and so forth and so on, right?
Right.
Right. So, and this chart illustrates the high income, high cost market, you know, and
Oh,
and the which is right here, San Francisco
wow.
area. Uh,
Unbelievable.
yeah, and the U.S. national average aggregate, which is right in the middle, and then the Midwest is a lot lower prices.
Hmm
So in summary, the recap, the crux of this article is such that housing stakeholders and investors like us, mom and
hmm
pop, regular investors who, we have regular jobs, full-time jobs, but we still like to diversify into real estate investing and all that.
hmm
Uh,
hmm
and for those of us who can identify whether and how AI-driven labor market and income shift will play out and position ourselves early. We have to get in early.
Right.
Could,
Absolutely.
yeah, could capture the outsized returns or avoid lag returns, or, in
hmm
essence, the way I interpret this last sentence is just the real estate market reward winners and losers.
There you go.
I mean,
hmm
if you want to play
There
the
you go.
winner's game, if you want to win in the wealth building, if you want to win in getting the return, you have to
Right.
strike in the right real estate market. If you buy in a wrong market, you're gonna get crushed.
Right.
You're gonna lose. You're gonna be a loser.
Right.
You're gonna quit the real estate wealth building game if you buy in the wrong market. If you don't do
hmm
the right due diligence and the whole 9 yards, right?
Right, absolutely. 100%.
Before the exciting part is before I will segue into a specific market, we're going to show you the housing opportunities. Before we go there, what is your takeaway from this article?
Well, I think it's interesting. You want to find the areas where that AI technology is really being generated, where people are relocating to or moving into. One thing about AI, you can do it pretty much from anywhere, but those are going to be areas where there's going to be a large congregation of people, especially younger people, if you think about it, because they're the ones that are moving into that AI and will actually really benefit them because right now, especially in California, it's so hard for a younger person out of college or whatever to buy. So this will actually give them an opportunity to be able to get into something earlier, than perhaps maybe some of us that didn't grow up in such a technology related age. But yeah, it's definitely something you want to be on top of as an investor personally and really find out where those concentrations of population are.
Yep, absolutely agree with you. So with that in mind, for those individuals still sticking around on this video presentation, still you're gonna reap the benefit because we can go through some specific local investment opportunities where which where AI and technology and everything else comes together. So here it is.
Mm-hmm.
And as you know, Julie, you and I talked about this before. Other people watching our video have not
Mm-hmm.
or not familiar with what we've been doing. Talk about North Texas is the recipient of this AI technological revolution, if you will.
Mm-hmm. Mm-hmm.
Okay? So let's quickly go over some of the slideshow, and we can go over some specific opportunities. So North Texas, Collin County, where Princeton's
Mm-hmm.
located, is the fastest growing county in North Texas. But if you look at the big picture of DFW, Dallas Fort Worth, uh, in about in about a few years, uh, yeah, Dallas Fort Worth metropolis will be the third largest metro in the country, largest
Mm-hmm.
in terms of population in only a few years, by the way, how time
Wow.
flies, a couple, 4 years,
Yes, it is. It is just a few years away. Amazing. Yeah.
which is
I
shocking.
remember I remember when everybody was worried about Y2K, and here we are in 2026 now.
Yeah, I know all the, anyway, but by the year 2100, into a next several generation from now, you and I will be
Right.
long gone by then. DFW can have a population of 22 million and will be number one in the entire US
Wow.
in terms of
Amazing.
metro in terms of population. So DFW is absolutely growing. There's a shortage of homes. Demand of homes exceed supply as we speak. So this means all those mom and pop investors, if you want to
Right.
make money, if you want a strong appreciation, this is the
Mm-hmm.
market to strike, right? Not only get amazing cash flow, but long-term value.
Right.
We're good. Without deeper. So let's
Mm-hmm. Mm-hmm.
we got so much to share. So when when a housing market is growing so fast due to technological change, AI,
Mm-hmm.
what have you, you would think that the median price of a home in such market is like at least 500,000, at least. But no, your
Mm-hmm.
investors, you're getting housing prices at entry-level home prices, affordable home prices, as a rental income property owner, which is in a
Right.
low 200K, not 500K median price, right?
Right. 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 Mm-hmm.
That alone
Wow.
is exciting, isn't it?
That is incredibly exciting. Wow.
Yeah. So
Amazing.
here's the word: get in early, like right now or
That's the
yesterday,
key. That's the key.
before home prices climb.
Hmm. Absolutely. Absolutely.
You snooze, you lose. So here are some of the underlying reasons why AI driven, technological driven, the whole diversified economy that's going on in North Texas and DFW Metroplex. One small sample is Texas Instrument have a $40 billion chip manufacturing plant just opened in Sherman, Texas.
Mm.
It's
Wow.
1 hour north of Dallas and Global Wafers.
Hmm.
And as a result, in the next few years, you will be in a city of only 50,000, Sherman.
Hmm.
They have 6,000 high-paying W-2 uh, uh, jobs, high paying 6,000 coming
Right.
into Sherman to work at those manufacturing plants. And in addition, at least 10 to 15,000 more support indirect jobs that will
Right.
drive the population growth, housing demand in
Mm-hmm.
in Grayson County, which Sherman is part of it. So let's continue. So
Mm-hmm.
the tech, so we're seeing tech boom, in the suburbs, in the exurb. I call it exurb, not suburb.
Mm-hmm.
Yeah, a lot of people have not heard the word exurb, but
Mm-hmm.
that's a new buzzword. It's beyond the suburb growth.
Oh, okay.
So consequently, we've seen tech boom not just in a Sherman Grayson County area. Tech boom is already exists in the core of DFW Metroplex as it is. So it's
Mm-hmm.
downtown everywhere.
Mm-hmm.
Look at that. Not only that, again, AI driven Wall Street is coming to DFW. We're talking
Wow.
I think within the next generation, there will be more Wall Street financial services job in the DFW than there is in New York City.
Mm. Mm-hmm. Mm-hmm.
That is just my opinion. It's just so
Right.
a lot of high income, technological, financial, high income financial jobs are
Right.
over here in DFW. So
Mm-hmm.
and this is just a tip of the iceberg. So, Wall Street Journal labels DFW the city that cannot stop expanding. So
Mm-hmm.
it's just this metroplex of 8 million people. It's just growing faster than there are 500 people moving into North Texas every single day.
Mm-hmm.
There's more people moving to North into Texas, not just North Texas, than
Right.
on a daily basis than any of the other 49 states. Why they're moving?
Wow.
What do you think? Why? How come so many people moving into North Texas, Julie? What are your thoughts?
Well, I think the new development for sure, but is probably driving it. But then I think there's a whole, doesn't Texas have the whole like no tax thing going on, no sales tax or something like
Yeah,
that,
yeah, no state income tax
which
for
is very beneficial for corporations.
that's right. Yeah, yeah. Oh, look, look, Wall Street and Goldman Sachs and all
Hmm.
the financial banking institutions, Chase, Wells Fargo, they bringing, they're building a second headquarters in North Texas. So once again, high income jobs are coming, high
Right.
income jobs. So they demand higher price housing. So and of course, DFW has a very diversified economy as it is, right? I mean,
Hmm.
it's not just financial services job. It's not just AI driven jobs.
Hmm.
We have data centers located in AI field data centers are is all over the North Texas landscape
Hmm.
as well. So we have, in DFW, there are more Fortune 500 companies located in DFW than anywhere else in the country. So
Right. 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 Right.
everybody's migrating into North Texas and into Texas in general. We're talking
Hmm.
Austin,
Hmm.
San Antonio, and Houston. This triangle. This
Yes.
is actually Texas is the number one fastest growing state in the country, and number two is Florida. So
Hmm.
Julie,
Okay.
that's why you and I, you've been part of my network for
Right.
years now. You know
Hmm.
why I love Texas and why
Yes.
Florida,
Hmm.
because one high level is that there are more jobs coming into this state. You know,
Hmm. Hmm.
Florida have slowed down, in the past few years, but
Hmm.
they're going back. They're going
Oh,
back
absolutely.
higher.
Absolutely.
Because I'm really we don't have time to talk about it, but
Hmm.
that's why we have turnkey cash flow
Right.
properties that we're promoting mainly
Absolutely.
in North Texas and Central Texas
Hmm.
and all over Florida. So
Right.
anyway, so that's it's the fundamentals. It's job growth, population growth,
Exactly.
migration growth.
Exactly.
The way I look at it is this is a trifecta. If you
Mm.
as a mom and pop real investor, if you want to make money for long term,
Right.
buy income property, entry level, affordable homes, and place a high quality tenant and surround yourself with a property management team that will do all the work for you.
Right.
So you have time freedom. You can own
Right.
10 turnkey cash flow properties across several markets,
Hmm.
50 or 100,
Yeah,
and
exactly.
you spend how many hours per month in managing your portfolio and
Less than an
paying
hour per month, not per week or per day, less than an hour per month. Yeah.
I
Hmm.
want you to repeat that because I don't, you did not stutter.
I know people don't believe that, but we have six properties, as you said earlier, and I spend less than an hour per month working on it. The other 29 days of the month, I don't even think about them because they're being handled. We have an excellent property management team, so I don't worry about, leaky toilets and, tenants or whatever. So,
That's right.
um, yeah, 1 hour, less than 1 hour.
Yep. Same with me. Sometimes I forgot I have all those rental properties.
Exactly. Exactly.
I just received my check in the mailbox. Well, I mean,
Yes.
uh,
Gotta love it. Gotta love it.
several thousand members we have, and in our within our community, same thing with them. Some of our members
Hmm.
have 10, 20, 30
Yes.
properties located in several markets, and they only spend 1 hour per month
Yeah.
in
Hmm.
managing the properties.
Yeah.
Anyway, all right.
It's about as passive of passive income as you can get.
Well, absolutely, absolutely. Okay, all right. Let's conclude this in the next 5 minutes. So, North Texas Boomtown. This is 17 boomtowns we're promoting off-market properties. You know, these properties are available within our network only. You cannot find this kind of off properties anywhere else because my local team in North Texas have been around for 20 something years. They have an in-house
Hmm.
property management. They have a great relationship with the national and local builders that will provide with these amazing properties that no one have
Hmm.
access to unless you are a member of our network,
Hmm.
which
Right.
is not hard to do. All you gotta do is subscribe to my YouTube channel. All you gotta do is put your email into my website. You can become a free member of our network, and
Hmm.
ultimately you can have access all these great investment opportunities. And the question is,
Hmm.
what are you talking about? What kind of great investment opportunity do you have, Mr. Yee? Well, here it is. Here
Hmm.
it is. Here are the typical blueprint. This is the pro forma. You buy new construction, turnkey, ready to go property for less than 250K, rent for yeah,
Mm.
what $1,900.
Nice.
I mean, at the end of the day, you have positive cash
Hmm.
flow, a very,
Hmm.
very, very, very good return. So at the end
Yes.
of the day, look, there are five ways to make money, not just cash flow. If you break it
Hmm.
down, right? Again, we don't have time to talk about it. You and I
Right. Right.
understand what I'm talking about. Five
Hmm.
ways to make money: cash flow,
Yep.
mortgage pay down by the tenant, a tax benefit, appreciation,
Hmm.
construction, and your total return the first year is at least 34%.
Right.
And you're experiencing this type of five ways to make money on your own on five of your income property.
Absolutely.
So
100%.
yeah, for the past 5 years, briefly, real high level, Julie, explain to the audience your five properties. In what way you are benefiting from five ways to make money from each of your.
Oh my goodness, all of them, all of them. I think the thing that, well, tax benefit too. I was thinking about the two that we have in our self-directed IRAs. So
Right.
we do get the tax benefit like any other IRA, where the everything that goes in it is tax deferred, so we're not paying any taxes on that. But um, I used to hate doing my taxes. Now I love my tax accountant because she gets me big refunds on everything else. And then we have the cash flow. We have the cash flow that is more than covering the mortgages that we have on the other four. And which is the tenant, by the way, is paying, so we're getting the benefit of the tenant paying our mortgage. I don't have to worry about that. And, and then all the other, and then the appreciation. I actually just pulled the numbers on all of our properties, and all of our properties just in like 4 short years have all increased in value. And we're not in a very high appreciating area, in upstate New York. But in the 4 years, we've experienced a tremendous amount of appreciation in the value of the property. So that's very exciting too. We're not planning to sell them. we get calls every other week. Do you want to sell? But we're not planning to sell them
Uh-huh.
because we are really more concerned about cash flow and supporting our lifestyle as we retire, move into retirement years. Yeah.
That's right, Julie. That's right. You
Mhm.
are typical investors that working through my network that are achieving similar experience and similar result across our markets in Texas, in Florida, in Alabama, and in Oklahoma and
Mhm.
New York. So anyway,
Right.
so currently, as we are talking in 2026, and in early part 2026, we have some amazing historic builder incentive. I'm not going to
Mhm.
go over them, but look, this amazing incentive, loan pay down, you can cash flow higher, and all the
Right.
builder incentives. So let's
Right.
go over several recent sample properties. Okay, I'm not going to go over any more details. We're running out of time. But
Mm-hmm.
big picture, this is our typical weekly
Oh,
listing
wow.
that this kind of property come across my desk for our captive network investors, and
Nice.
and this is absolutely mind-boggling.
That's beautiful.
This is under 200 grand on a property
Amazing.
in North Texas in a boomtown called Josephine. Under
Mm-hmm.
200 grand,
Mm-hmm.
brand new construction, and rent for 1750, and a monthly
Nice.
net cash flow at the end of the first year is 633. 633
You gotta
monthly.
love that. That's incredible. That's
Well,
an incredible cash.
there's a slight catch. Okay, I want to be transparent. The taxes, the
Mhm.
property taxes monthly, the first year is only $85.
Oh my goodness.
Property tax is not going to reset until the second and subsequent years. Let's
Hmm.
let's say the property tax is 1.5, even 2% property tax rate.
Hmm.
In the second, third, fourth year, you're not going to get 633 monthly cash flow. You might get 400.
Right.
Is
Which
that
is still very, very good.
exactly
Really. I mean, very, very good.
400 monthly cash flow? That's look, don't you and I agree based on the skyrocketing housing prices since
Hmm.
the pandemic, since 2019 even, and
Right.
and the wages have not kept up. Do you agree?
Mhm.
Most part of the country, you it's very, very hard to find cash flow properties.
Oh, absolutely. 100%. That, like I said, that is amazing. For 600 is incredible. 400 is still amazing. And then again, you have to keep in mind your tenant is paying down your loan. So, you're getting 400 cash and not worrying about anything.
Yeah, plus you have new construction. I'm not going to discuss, the value of buying new construction, the whole 9 yards.
Oh, there you go. And then you get the builder incentives and all that as well. So,
Yeah, exactly. Okay,
hmm
let's go over some more deals. It's just amazing deals. Why would anybody buy other, Julie, why would any investors, regardless of where you live in the country, why would
right,
put themselves in a position at a stress level to buy crappy properties in other part of the US, to buy
right,
older properties without a good team surrounding them, without
right.
and also, why would somebody do like short-term rental or mid-term rental or even co-living? All the
Hmm.
actual work, all the
Hmm.
you're creating a second job with much higher risk scenario as
Exactly.
opposed to buying turnkey property.
Hmm.
Do right now, we're almost doing nothing
Right.
because
Yeah.
almost you are a passive freaking investor, passive,
Very much so.
right? Not hundred
I
percent.
mean, people don't understand, and I think you're asking why do people, do it, I'll say the hard way. Um, if you got that kind of time and patience and money to throw into what could be into a white elephant, that's great. Some people like to be very hands-on.
Right.
I prefer to use my time for other things, like traveling and being with my friends and being with my husband and, moving towards our retirement dreams and goal. And I don't have that type of time and energy, especially that I live in California and my investment properties are in New York.
Right.
So, that would be impossible for me to be hands-on with that. So this fits our lifestyle, and I think this makes sense for most people.
Yeah.
Most people are not skilled. We were brand new in terms of buying, an investment property, and once we got it and got it going, and it just rolls along. It's seamless. We don't worry about it. So that works for me.
Yeah, Julie, I really resonate with what you just said. Really, the quote you just made. Most people are working full time, have a W-2 job.
Right.
Why would you put yourself in a position to be so stressed out to
Hmm.
self-manage your property or do a fix and flip, do the BRRRR strategy. You buy, you
Hmm.
renovate, you repeat, and you refinance. This old traditional method of buying property is just it does not work in today's housing environment.
Right. Right. Exactly.
Yeah.
Hmm.
Similar,
Absolutely right.
yeah, Julie, similar with me, I'm not going to trade my time for freedom, time freedom,
Hmm.
because you and I devote most of my time. I travel full time for decades now, full time
Right. Okay.
world travel, taking luxury cruises on a consistent basis all these years because I am not a landlord. I am an
Right.
investor.
Investor.
I delegate all my turnkey newer construction properties cash flow to great property managers we have in the various locations that we work with,
Right.
and we also and I out resource our tenants. Our tenant who paying the rent, our tenant is paying all our
Hmm.
obligations. They are making us rich. Our tenants are paying our monthly mortgage, our taxes, our insurance, our property management fee, our 5 to 7% vacancy, and
Hmm.
cosmetic repairs here and then over the years. At the end, we still have cash flow.
Correct. Correct. Yes, absolutely. Can't beat it.
Let's conclude with few more rentals. Just okay, people can pause the screen and look at the numbers, the pro forma, all they want because this pro forma is very conservative. You can look at 1 year, 5 year, 10-year trajectory, how much.
Hmm.
Then, of course, we have Princeton, the probably number one fastest growing city, Princeton,
Nice.
Texas.
Hmm.
Brand new 222K, rent for 1725. Look, these home prices and
Wow.
this rent is going to go up. Okay, it's
Hmm.
inevitable because there's such amazing shortage of homes to buy. The rental situation is so strong. There are so many renters out there. People have high income
Hmm.
class moving into the area. AI, diverse economy, high tech, low tech, everything here in DFW. And this is just the tip of the iceberg. Look, this price point you're not going to see anywhere else in the country. Look, barely 203K in Princeton, Texas, 1750.
Wow. 4 bedrooms. Wow.
Yeah, this time the property tax is correct. It's still cash flow almost $400,
Hmm.
and the property tax is 420. We're talking 2% property tax rate, and yet your monthly
Hmm.
cash flow is still almost $400. Uh, I mean, you look at
Wow. That's
you look
excellent.
Yeah, cash on cash return, cap rate 7%, cash on cash
Hmm.
7%,
Hmm.
year five,
Right.
cash on cash. So, I mean, this number is off the chart. I'm not going to go over it.
Right.
Another boomtown, Greenville, 25% down payment, builder incentive and all that stuff, 239K, brand new, 1750. Yeah, cash flow for 260. And look, again, Princeton once again, almost 400K, 203. This is absolute incredible prices. We're talking
Hmm.
bedroom, 2.5 bath, 1,535 square foot. I mean, no doubt in the next few months, next few years, this rent could be way more than 1750.
Oh, absolutely.
And this home prices,
And I was going to say the prices are going to skyrocket. Yeah.
prices is not going to be
Hmm.
203.
Right.
So
Right. Right.
if
Exactly.
anyone, it just okay. Let's fast forward again. Greenville,
Hmm.
look at this, great cash flow, build, A class, excellent renters, easy to rent, you know, all cash flow, builder
Hmm.
incentives. I mean, turnkey, easy. Our great property
Nice.
manager on the ground been doing it for 20 years. They know the neighborhood, they know the market.
Hmm.
It's a one-stop shop. It's turnkey, almost passive investing for God's sake.
Hmm.
You can't get any better than that. It's too good to be true, yes, but it is very true. Look,
Right.
Greenville, Texas, 256K, 230. But this great property in excellent Sherman. Sherman, amazing, amazing. If you don't
Hmm.
pull the trigger in
The
Sherman,
prices are amazing. They really are.
look,
Brand new construction. Oh my
yeah,
God. Even the HOA is very reasonable.
yeah,
Sometimes the HOA kills you on but it's like super reasonable. Yeah.
yeah. This is annual HOA, 990. So monthly is like I don't know, $70 per month, and
Right. Yeah.
you still cash flow and
And
still
you're still cash flowing.
215K, this is absolutely just unheard of. 14, 11 square foot, three bedroom, two bath, cookie cutter homes, all turnkey,
Hmm.
all ready to go, great property management, the whole 9 yards. When the property management reset the second year, the first year is free property management, so good for you guys. And the second and subsequent years property management fee, I believe, is only 6%, right? Of
Hmm.
rent, which is
Hmm.
very good. Okay, let me see what else. Again, I don't know which this one is located in Howell, Texas. We have brand new construction in Howell, Texas,
Mm.
HWE, which is like 10 miles below Sherman. Uh,
Right.
this home's
Very
beautiful,
nice.
beautiful house, beautiful location, beautiful neighborhood, excellent rental market,
Hmm. Hmm.
cash flow, excellent appreciation potential. How Texas, another up and coming boom town. We have boom towns galore in North Texas. I mean, you look at 20,000 cities in the country, you look at 3,000 counties in the country. Try
Hmm.
to try to confront me. You're not going to find anything of this value any
Right.
other market in the
Right.
country. Okay,
Right.
I challenge anyone to refute my confidence in this market. Okay, you can
Right.
compare another Josephine property. I know the first year's tax rate is pretty minimal, but you enjoy the first years of almost $800 monthly cash flow
Hmm. Hmm. Wow.
because the
Unbelievable.
yeah, because the property tax rate have not reset until the second year. So
Right.
enjoy the first year cash flow of almost 10 grand.
That's incredible. Wow.
Yeah, Joseph.
Amazing.
Yeah, which is like 40 minutes east of the Dallas Metro.
Hmm.
232K brand new. Look at that. Four bedroom, two bath,
Hmm.
almost 1,600 square foot. Next few years, when you get your next renter in,
Wow.
you
Nice.
pay way more than 1925, right?
Oh, absolutely. Absolutely.
I rented
Nice.
I rented with a family of four or five, renting a four bedroom from you, which is two-car garage, 1,600 square foot. They could pay you, who knows, right?
Hmm.
2,100, 2,200 in a few years down the road. Okay. Right. I think another one, uh, uh, high cash flow. Denison, another boomtown north of Sherman, like 10 miles north of Sherman. Again, brand new
Hmm.
construction,
Hmm.
225K, rents for 1675, cash flow 160, a little bit low cash flow, but the it's okay. Taxes is relatively high. Anyway, that's all I have to say. Okay, that's it.
There's so much. It's, you could go on for hours, but yeah.
I've done a lot of YouTube videos. I've done,
Hmm. Hmm.
for the first time subscribers, even if you could put your email into my website, become a free member of our organization, then you can receive weekly email newsletters about free real estate education and what have you. But the rest of you, if you're really motivated, if you want to pull the trigger, contact me directly so we can do some complimentary pre-screening consultation.
Exactly.
All right. So, Julie, what's your recap? What's your overall takeaway from hearing from this AI, artificial
Right.
based metrics, uh,
Right.
which you did not anticipate hearing before the Zoom call began.
Right.
What are
Right.
your
Well,
surprising?
I think it's something else. I think if you're going to really take advantage of it, like you said earlier, you got to get in on the ground floor, and AI is not new, but the direction that it's taking within the different industries it's new, in respect. So I think that people should do their due diligence, look into it. Those properties in Texas, obviously a boom town, you can't lose if you get in early. There's no way you can lose if you get in early, and there's really no way you can lose with property anyway. So I think you just have to take advantage of it before the world hears about it, and then
Uh,
you're going to get left out because
okay,
the opportunities will go too quickly.
okay. I give my takeaway. I'll give you a word of caution. I know what Julie said is to come from her own personal
Right.
analysis.
Mhm.
Julie, and I, we are not licensed financial planners,
Absolutely.
not licensed tax advisors, and what have you. Do your own due
Hmm.
diligence, right?
Absolutely.
Consult your own financial advisors, do your own research and due diligence, even though we have vetted our markets, we have
Absolutely.
teams in place in this kind of market. So again, so at the end of the day, make an informed decision, but don't wait too long because
That's
this
right.
this kind of opportunity is not going to be around forever. So
That's right.
Anyway,
Absolutely.
thank you so much. Enjoy your presentation as always, Julie.
Thank
Thank you so
you.
much, everyone. Thank you for attending. Hope everyone
Mhm.
received a lot of value. Have a nice day. I'll see you guys
Great.
next time. Thank you, Julie. Have a nice day.
Thank you. Bye-bye.